Midway through the month of February, let's see how it's looking on the calendars for next week. All with Bob Mason of FX Empire. This is the week ahead. Hello Bob, and thank you once again for joining us as we look at the week ahead. Let's start with the economic calendars for the major currency pairs. How's it looking for the US, the UK and the Eurozone?
It's an interesting week ahead for the global financial markets. On the economic data front for the US dollar, we've got New York Empire State Manufacturing Index numbers due out on Tuesday, and then Philly Fed numbers for February due out on Thursday. All of that before the private sector PMI numbers on Friday, the prelim February numbers. Why are these interesting? Well, we're looking for any effects of the coronavirus spread in China and beyond on the global economy. So if we see a marked deterioration in private sector activity, then the numbers are going to suggest that it may not just be the first quarter, and risk aversion could plague the markets in the week. Housing sector figures through the week will also have some influence. Obviously, that's a bellwether for the US economy. When we look at employment numbers, interest rates and mortgage rates, however, we're not expecting any dire numbers from the sector. So really it's focused on manufacturing and service sector activity. Obviously, service sector activity remains key for the US. Moving across to the euro, we've got business and consumer sentiment numbers due out in the early part of the week, and then focus will shift to private sector PMI numbers at the end of the week. We saw private sector PMI numbers pick up, or at least improve, with Germany hitting a 5-month high in January. If the effects of the coronavirus are as to be expected, and the auto sales figures for January out of China, which reflected an 18% slide year on year, if that's any indication of what's to come, then expect these PMI numbers to disappoint. How the ECB responds remains to be seen, but if consumer sentiment declines as well, and business sentiment, then expect the euro to really be under the hammer. Moving across to the pound, it's also a busy week. We've got inflation figures, employment numbers and retail sales figures to consider. The employment figures kick things off, and expect claimant counts and wage growth to be the key drivers on Tuesday. Inflation figures should have a relatively muted impact relative to retail sales figures on Thursday. Those numbers are really going to have to give the pound a big support. You know, obviously we saw the pound get a boost last week off the back of the cabinet reshuffle and expectations of the government to loosen the purse strings. In the week ahead, however, you know, obviously there's going to be some focus on Brexit. EU member states are meant to finalise their terms of negotiation for trade, and that's going to likely keep the UK hinged on a number of strings attached, something that Boris Johnson's probably not going to be like very much. So pound, data driven, though expect some political influence in the week.
It looks like our traders should be alert to a busy week ahead on the economic calendar front. But how's it looking for the commodity currencies?
For the commodity currencies, it's a relatively quiet week on the economic data front. Looking at the Aussie dollar, we've got fourth quarter wage growth figures due out on Wednesday, and then the all-important January employment numbers on Thursday. Obviously, the RBA is particularly interested in wage growth and employment conditions, so wage growth will need to at least hold steady or see a slight pickup to support the Aussie dollar. However, it will all hinge on employment numbers on Thursday. If those numbers disappoint, factoring in the likely effects of the spread of the coronavirus across China and the impact on the region, dire numbers are gonna test the Aussie dollar at 67 levels against the greenback. We saw the RBA be particularly hawkish, well, more hawkish than we expected last time around. Weak numbers on the employment front, and the doom and gloom from China, and then expect a shift in sentiment once more. Looking across at the Kiwi dollar, we've got inflation figures due out, wholesale inflation figures due out for the fourth quarter. Those are due out on Thursday. Again, expect some immediate response to the numbers, though ultimately it will all hinge on the COVID-19 numbers through the week. If we see a continued rise in cases and a pickup in the death toll, then expect sentiment towards first quarter to extend beyond the first quarter into the second quarter. That would have to lead to a revision by central banks, who are expecting a pickup in economic activity in the second half of the year. So it all hinges on the numbers in the week ahead. Stats will obviously influence, but expect the spread of the virus across the globe to also be a factor to consider for the commodity currencies.
With key stats due to come out from Japan next week, it promises to be a busy week ahead for the Asian markets, and especially with the coronavirus still in the balance. How's it looking for our Asian giants?
Busy week ahead on the economic calendar for the Japanese yen. At the start of the week, we've got fourth quarter GDP numbers due out alongside industrial production figures for December. Any contraction in the first quarter, and then expect doom and gloom and market risk aversion to plague. Market expectations are for the first quarter to be quite dire as a result of the spread of the COVID-19 across China and beyond. Midweek, we got January trade data out of Japan as well, and actually that will probably garner even more interest because that will be early signs of what impact COVID-19 has had on trade terms within the region. Any dire trade figures, and expect risk aversion to really hit the markets. For the Bank of Japan, there's been the promise of monetary policy support, contraction in the first quarter, expectations of a dire first quarter, and disastrous trade numbers should they be for January, and that really does put the pressure on. Expect inflation numbers at the end of the week to have an immaterial impact. However, we're not seeing any inflationary pressures to influence monetary policy anytime yet, and we haven't seen for some time. For the Chinese yuan, there's no stats due out through the week, so the focus really will be on COVID-19 and the stats. Will there be a marked acceleration within China and beyond China's borders, and obviously death rates as well, or will there be some slowdown in the number of cases per day? Obviously that will be material, and the market's really looking for a turnaround at the end of the first quarter. If these numbers begin to suggest that cases will continue to rise through to the second quarter, then obviously there's going to be a revision to the outlook for growth within China and beyond.
And finally, let's talk about geopolitics. With Trump and the EU still in this trade negotiation, with Brexit, the Middle East still in focus. How's it looking on the geopolitical front this week?
On the geopolitical risk front, we've got three themes really to consider. We've got the threat of Trump's EU tariffs to consider. Obviously, the EU is not going to stand back and accept Trump's terms, so there'll be some tit for tat going on there should there be no immediate agreement. So that would add even more pressure on the euro that's under the cosh already because of economic indicators so far, and obviously the likely effects of China's slowdown on the region's growth prospects. For the UK, obviously we've had the cabinet shuffle. Market expectations are for the UK government to loosen the purse strings. So while that's a positive for the pound, we can expect focus to also go back to Brexit and how the UK is anticipated to progress on trade terms. EU member states are meant to finalise their terms of negotiation by the 25th, so obviously there'll be some chatter, and any strong arming from the likes of Macron will obviously test the pound in the week. The last thing to consider is obviously the Middle East. The Democrats have been trying to block Trump's ability to go to war with Iran. Obviously Trump has the ability to veto that vote, which would then suggest that Trump is still keen, willing and able to go to war with Iran should Iran fail to return to the negotiating table. So I'd say those are the three key themes on the geopolitical front. On the earnings front from the US, we've got Walmart, which is out next week. That's going to have a material impact. From the UK, we've got the banks, we've got Barclays, HSBC and Lloyds in focus, and there's BAE Systems as well. From Germany, we've got Allianz, Deutsche Telekom and the Burst to consider. Those aren't going to have a material impact, so expect UK banks and Walmart to be the key drivers on the earnings front.
Well, that's it for today. That was the week ahead with Bob Mason of FX Empire, and we hope to see you again next week.